Well, that confidence in a deal to solve Europe's debt crisis appears to be holding up. The markets in Europe are open and they're up. The weekend G20 finance ministers meeting seems to have done the trick with an official communique with some warm words on concerted action. Trouble lurks, though. Details are still sketchy, division still apparent, and time is running out with the promised deadline fast closing in. Well, I'm joined now from BGC's trading floor in London by Louise Cooper. And Louise, the decision makers have a week before this Brussels summit on Sunday. What's in this grand plan?
At the moment, we don't know. If you look at American Treasury Secretary Tim Geithner, basically saying, yes, I have confidence that the French and the Germans will come up with a plan, and the plan needs to include these kind of things. So, we are, it appears, slowly getting towards something, but I still think there are just too many points of contention. I think it will be terribly difficult for all 17 Eurozone countries to come up with a plan that they all agree with. I still think the hurdles for this are high.
Yeah. You mentioned Tim Geithner there. My understanding is that both he and indeed the IMF were looking for the ECB to guarantee sovereign debt and also for that speedy recapitalisation of European banks, neither of which seems to be where the Europeans are heading.
Well, I mean, if you look at European banks, they seem to be far more keen on reducing the size of their loan books in order to meet higher capital adequacy ratios than actually issuing equity at these levels. I mean, some of these banks are trading at sort of 30% of book value, so their shares are incredibly depressed. And therefore, a lot of the bank CEOs are reluctant to issue equity. Well, I doubt they'll find any private buyers, but they definitely don't want to issue equity to their national governments at these levels, where it's highly dilutive. And so, therefore, you have Joseph Ackermann, the CEO of Deutsche Bank, saying last week, we don't need capital. I don't want to issue capital. And you have plenty of speculation in the weekend press here in the UK saying that banks would prefer to sell businesses to Arab buyers or Chinese buyers rather than issue equity. So, would you need to force banks to recapitalise? I don't know. I just think there's still an awful lot of contrarian views. There doesn't seem to be a unity of purpose.
The elephant in the room seems to be the fact that there is going to be a Greek default.
Well, unless somebody gets a chequebook out and gives Greece a load of money, then there will be. And, the 21% haircut for private banks, for private bondholders of Greece, I mean, that is effectively a default. And again, there's rows about that because, Angela Merkel wants banks to take a 50% haircut on their Greek holdings. But a lot of banks aren't happy about that. They said, no, we've agreed a 21%. That's what we've agreed. That's what we want to stay it at. So, again, there's just so many different opinions coming out and time is of the essence. We have not got, or they have not got long to sort this mess out.
That 50% haircut that Germany is after, and on the other side you've got France as well, who doesn't want anything like that, I understand.
Well, and also, we hear from, French politicians that, yes, we will recapitalise our banks if necessary. Then they say, actually, no, they don't need it. So, I mean, I find it quite difficult as a sort of, a markets analyst looking at all these, to look at all the various, contrarian views you have coming out and keep on top of them all, because one person says X, another person says Y, another person says Z, and it's trying to work out, well, where are we then? If you're all telling me different things, where are we? And that is just, who knows?
So as a markets analyst, do you think the market is yet again ahead of itself?
I think equities are very cheap. I think that equities don't move in a straight line. You get rallies. I think you've probably seen a lot of short covering. I think the first week of the rally a couple of weeks ago was on good volume. Last week wasn't on great volume. Having said that, on Friday we closed above the important 1200 level for the S&P 500 in the States, and volatility has come down a long way as well. We closed below the 30% volatility for US stocks as well on Friday. So those are quite important technical indicators. However, I just think that over the next 6 to 12 months, markets will continue to be news flow driven, highly volatile and swinging around all over the place, depending on whether they believe what the politicians tell them or they don't. I mean, this is not a crisis that's going to be solved in a week or two. We are in it for the long haul.
Can I just get you on a bit of company news that I see? BHP has got a $4 billion, BP, I beg your pardon, has got a $4 billion settlement in its oil spill in the Gulf of Mexico.
Yes, BP's spending $4 billion cash to settle all disputes with Anadarko, one of its companies involved there. This is being taken marginally as good news for BP. The share price is up 5% today. BP has lagged the other oil majors, European oil majors, substantially year to date. The stock's down about 25%, and it's trading very much cheaper than the other oil majors in Europe as well, primarily because it's got this massive overhang, this massive uncertainty concerning all the potential claims for the Deepwater Horizon oil spill of last year. So yes, it's good news it's settled with Anadarko, but it's got a hell of a lot of other potential claims hanging over it. And on top of that, you've got worries about the strategy, worries about the CEO, big concerns for BP. So I think moderate positive, but the jury is still out on BP.
Finally, Louise, Occupy Wall Street seems to have gone global. Where do you think that's going to go?
My view is I think there'll be more and more civil unrest, really. I think that austerity breeds civil unrest, and it's going to be difficult. I think a lot of European countries haven't even begun their austerity programs. I think here in the UK we've got big cuts to public sector workers, and I think we're going to have very muted growth for years to come as the whole debt bubble sort of works itself out. So I think there will be a lot of civil unrest, and I think the Eurozone crisis will only make that worse. So
yep.
I think, rather sadly, time to get used to it.
Louise Cooper, let's hope this weekend will pacify somewhat. Thank you very much for joining us tonight.